You've probably heard a number of political figures lately describe Bitcoin as a purely speculative asset with no intrinsic value that can never fulfill the role of a currency. Christine Lagarde, president of the European Central Bank, had just expressed herself on the subject a few months ago in an interview to BFM TV, and unfortunately we can't say that she's a big fan of Satoshi Nakamoto's invention. She gives a framework for understanding cryptocurrencies along three axes. Individuals buying crypto, and more specifically Bitcoin, are not investors or users, but consumers. We'll come back to this. From her perspective, the criminal use of cryptos is a major issue, as it is the second point that comes to her mind. Finally, she explains that private players operating with cryptocurrencies should be subject to the same regulations as companies in the same industry. She implies that cryptos that are similar to money should be regulated like banks, even though, in her words, Bitcoin is not a currency. The message is pretty clear. Bitcoin is for thrill-seeking speculators and will have to be regulated to keep crime down and the cattle in check. In this video, we'll quickly move away from the consumer and crime side of things and focus on the monetary side of Bitcoin. So to make a long story short, because we will deal with this subject in depth later, talking about consumers of cryptocurrency is a way to avoid talking about users or investors. To put it crudely, consumer reduces a citizen to a consuming stomach, while the notion of users could refer to the question of Bitcoin's usefulness, which could quickly bring us to the thorny issue of monetary sovereignty for the ECB. And talking about investors suggests that Bitcoin is an investment. In short, the very thoughtful use of the term consumer avoids talking about the deeper meaning of this potential revolution. Then, as for the criminal use of cryptos, we'll also cover this topic in depth later, but here I'll just remind you that the primary currency used for criminal activities remains the dollar, and more generally, cash. Bitcoin is a pseudo-anonymous currency, and if I were to get into crime, I wouldn't do it with Bitcoin because the chances of getting caught are much higher than with good old money through tax havens. Now that we've cleared the two pitfalls set by Christine Lagarde to reduce Bitcoin to a new kind of lottery ticket that has a natural inclination to serve crime, let's focus on the currency issue. So, is Bitcoin a currency or not? Come on, let's go. Money is so much a part of our daily lives that we forget about it, yet it is the oxygen of our economy. A currency unlocks potential trade in an economy through a key signal, the price. Without this information, we are unable to cooperate effectively on a large scale. And unfortunately, we have to admit that every time a civilization found itself with a diseased currency, the civilization collapsed. I really like this chart, which shows the evolution of the dollar against gold. The dollar loses its value during major political and economic crises because the value of the currency is always a preferred adjustment variable of impecunious governments. Money is ultimately one of the oldest tools, one of the oldest inventions of mankind. With money, our ancestors solved the problem of the coincidence of needs in time and space. To put it very simply, a currency is a social convention to exchange value that relies on a more or less sophisticated technology. The first and most widely used monetary technology still in use today is the memory of those who exchange something. Two neighbors keeping track of the fact that one has done a favor for the other is a way of storing the history of an exchange through a relationship of trust in the people you know intimately. Within the family, between friends, and for a very long time within the clan, all exchanges were done on the basis of trust, and the history of these exchanges was stored in people's memories. We do each other favors because the individuals in these small communities know who contributes and who benefits from others. On this scale, the notion of debt, of a deferred promise of a loan for a return, is omnipresent. The debt book is simply the memory. Barter is a very different monetary technology because trust does not intervene. Each party is satisfied at the end of the barter and there are no debts. However, the first embryonic currencies appeared through barter. Our ancestors selected certain commodities rather intuitively than others to serve as a commonly accepted basis for bartering. These all had in common that they were recognizable, can be quickly authenticated, portable, easily carried, divisible, allowing for small transactions, fungible, one coin is interchangeable with another, rare, relatively difficult to find, preservable, allowing to keep its wealth over time. Thus pearls, salt, barley, or even shells were used at some point in history as currency because they more or less fulfill the above characteristics. Thus gold gradually became the most suitable commodity for storing value and making exchanges. It was recognizable, portable, divisible, fungible, very rare, and storable. Gold thus became a reference currency in most of the great civilizations. Remember that until 1971 and the end of the gold standard, almost all currencies were still linked in one way or another to gold, thanks to the dollar. With the appearance of governments and the need to cooperate with more and more people who did not know each other, a new monetary technology appeared, the IOU. Bringing depth into monetary technology by inventing the banknote, the bill of exchange or credit, was a great promotion of trust in the exchange of value. In other words, any exchange with so-called commodity money, such as gold or salt, does not need trust. However, for banknotes or credit, the technology you use will have a degree of trustworthiness. The bill of exchange, for example, which is an IOU from a private lender, can be more easily challenged than a bill from a central government. The monetary technology of the bill of exchange, therefore, has a lower degree of trustworthiness than that of the ECB's banknote. That is the great invention and promise of Bitcoin, a higher degree of trustworthiness than any other monetary technology. As currently the highest degree of trustworthiness resides in monetary technologies based on trust in the government, Christine Lagarde knows very well that to touch the currency is to touch the power of the government. So, how does Bitcoin work? Satoshi Nakamoto, the mysterious creator of this technology, made Bitcoin perfectly recognizable, portable, divisible, fungible, rare, and storable. Bitcoin's grand proposition is this: to create the most reliable ledger humanity has ever had, the highest degree of trustworthiness possible, with immense ease of use. Bitcoin has succeeded in creating a dematerialized but non-copyable unit of account. Bitcoin is both a kind of digital asset, something rare, and a Visa or MasterCard-like payment network. That is, information. To understand how Bitcoin has these characteristics, you have to dive into its innards. In this case, it's computer code. You'll discover all this step by step on this channel, so take the opportunity to subscribe and don't forget to click on the bell to be notified of future episodes. Remember that it works, at least for the last 12 years. It is important not to confuse the characteristics of a currency with the function of the currency. Bitcoin has all the characteristics of a good currency. It is recognizable, portable, divisible, fungible, rare, and storable, but it's not yet used as such. Bitcoin is not yet mature. The process of emergence of a currency, when not imposed by a government, is long and complicated. It is impossible to become a store of value, a means of exchange, and a unit of account overnight. It is a recognition through use that is becoming widespread in a population that makes a monetary technology a real currency. Bitcoin has been on an upward trend for 12 years. Bitcoin has, on average, more than tripled every year for the past 10 years, with only 2 years in the red. That's pretty impressive. Looking at the numbers, Bitcoin is probably one of the best investments you could have made in the past 10 years, ahead of Netflix or Tesla. In short, Bitcoin naturally takes its cues from reality. It is this tumultuous process that will lead to its adoption or rejection. As for the means of exchange part, let's note, for example, that since the beginning of 2021, the Bitcoin network has been transferring as much value daily, if not more, than a tech giant like PayPal. One of the largest transfers on the Bitcoin network, 1.15 billion, was made in 2020 in less than an hour for the modest sum of $3. This transfer with the current system would have cost several tons of millions of dollars and would probably have taken several days. So can Bitcoin be considered a currency? You be the judge. I would be very curious to know what you think. Feel free to share your point of view in the comments. Personally, I think one of the most likely scenarios is that Bitcoin will coexist in the future with the digital currencies of central banks, the e-dollar, the e-euro, the e-yuan, etc. Bitcoin could be everywhere, but invisible, like the internet today. Future technologies and mobile applications will probably allow you, for example, to have a bank account that includes Bitcoins and government currencies, and you will switch from one to the other without even noticing. This is one possibility, but it's very complicated to know in which direction the ecosystem will evolve. So buying bitcoins today is still a gamble that Bitcoin will continue to grow and that more and more people will use it as a store of value and a means of exchange. In any case, Bitcoin is off to a pretty good start. If it continues at this rate, the network will reach 1 billion users by 2025. That's faster growth than the internet. But Bitcoin is about much more than a financial aspect. By holding Bitcoins, you are also implicitly voting for the emergence of a new and more transparent financial and monetary system, a system where monetary power and political power are clearly separated. You are participating in the silent revolution aiming at rebalancing powers and reinforcing individual liberties and privacy. But we'll have the opportunity to talk about all this in other videos. So on that note, see you soon for new videos. Ciao.
Thank you so much for watching. If you like my videos, please subscribe and don't forget to hit the bell if you want to be notified of the next episode. And if you want to invest in the stock market over the long term or diversify your financial portfolio, I'm offering you an analysis of the 8 European star stocks to have. Thanks again for watching and have a great day.